Jack Crooks, Black Swan Capital, was going to come to Vancouver, make the trip up from Florida. I was told Grant Longhurst, who helps me with the conference, I was just thrilled at that. Jack, thank you so much for coming up and making the trip, and I know the audience is waiting to hear what you got to say.
It's a thrill for me, so thank you for having me.
Well, great stuff. Black Swan Capital, but find them at blackswantrading.com, blackswantrading.com. And by the way, if you go there, you can just click on there, and you can get a complimentary letter that Jack, I read every day. Whenever Jack puts it out, I'm reading it, talking about the kind of context that we're making all of our decisions within. So one of the big contexts, Jack, and I know I had sent out a note just so you know to everybody saying you were going to be here. And of course, one of the big questions is the U.S. dollar. I always tell the audience, if I could get one thing right, that's what I'd choose, because, of course, commodities are measured in it. Canadians want to know about oil, about gold, of course, the loonie, that kind of stuff. So let me just start with a quick overview for you of what you think's happening in the currency markets.
Well, I think we're seeing a combination of a change in regime. Obviously, I refer to the new sheriff in town with Trump. Mm-hmm. And interestingly, you see bear markets in dollars when you have Republican presidents. If you go back, it's almost right on the money. Democrat presidents, bull markets. The cycle's amazing. We're looking at a top in the U.S. dollar, which everybody has seen in January of 2017, and we don't think that was a coincidence. Mm-hmm. There's a lot of things that lined up. So the question everybody has is this going to be another very long-term downtrend in the U.S. dollar, or are we going to see something else?
Yeah.
A lot of stuff going on in the market. Interest rates are going up. Is that going to hurt commodities? What about the trade relations? Everybody's worried about Trump. Needless to say, he makes everything interesting on a daily basis. But longer term, we're pretty bearish on the U.S. dollar.
Well, one of the best pieces of advice I've ever received came from you. This goes back several years, and it's really pertinent for someone like myself who spends all day reading about it or thinking about it and all this. And you said, but Mike, what you've got to do is focus on what the market cares about. So I think we'd have lots of people share their same experiences. No, this should have gone up because of X. Well, the market didn't care about X at that point. And actually, it related to the U.S. dollar when you were talking to me in gold. And at the time, we were getting all the typical geopolitical problems and the Fed's printing like crazy, all of these things that should have skyrocketed gold. And you said, no, Mike, you got to figure out, what does the market care about? And the market just said, I'm going to the U.S. dollar when that happens. So what do you think the market cares about right now? What sort of message are you getting from the market that they're focusing on?
I think generally you're seeing some really negative sentiment in the dollar here. But I think we're going to see possibly a big head fake, because everybody's focused on interest rates.
Yes.
They're going to just continue to go straight up. But the reality is, if this stuff goes straight up in the interest rate side and the dollar goes with it, it could create some real turmoil in the global economy.
I think 100% right.
A huge financial accident. And I think for that reason alone is one of the reasons I think the U.S. is going to make a policy decision to possibly let the dollar go.
But what an interesting point you're making. And again, this is so important in the global context. $230 trillion in debt out there. The majority of it denominated in U.S. dollars, not just U.S. dollar debt, but we know that, and we've talked about this on this show, third world countries issued bonds in U.S. dollars. And you're right, if the U.S. dollar gets strong, that's where the real problem comes. I know Martin Armstrong was talking about that last night, that the problems don't come when the U.S. dollar is weak. Problems come when the U.S. dollar gets strong because of, as you just alluded to, Jack, you got to pay back those debts in U.S. dollars.
Yeah, and that's exactly right. The analogy is the Asian financial crisis.
Yeah.
The U.S., that's when the dollar started up in another new bull market during the Clinton administration. Interest rates almost doubled by 300 basis points about a year before that. Short-term rates, even though the long-term trend was down, the pressure on those countries was tremendous. And we're in a similar situation today.
This is why I love doing this show, by the way, everyone, is you get to this stuff is so important. It impacts our lives in a dramatic sense, obviously, because we're talking U.S. dollar, but we're really talking the loonie at the same moment, in time. And when the loonie gets strong, well, that's like we got a raise. People got to understand that. When the loonie gets weak, it's like we all took a pay cut there. So, as I say, and listening to the different factors, and Jack, your point about the U.S. dollar, or we had Steve Mnuchin about a month ago or a few weeks ago, the Treasury Secretary, say, guess what? I want a weak U.S. dollar. I mean, these are the kind of things that analysts like yourself, of course, have to weigh and measure, every day, but it's a fascinating time that way.
Yeah, it really is. It's, because so many people are on the fence about both the market and interest rates. And as you said, the dollar really is such a huge driver of global capital flows. And I think you make this point consistently. If you can't get the dollar right, you're going to be in the wrong ballpark in a lot of asset classes.
Yeah. And for us, it's oil. Of course, a big, people listening today throughout Alberta, Saskatchewan, Newfoundland, that's a big deal. Whether it's your mining companies in BC and Ontario, the list is a long one, of course, because it's measured in U.S. dollars.
It's so huge. Yeah, the commodity index is so closely correlated on a long-term basis, and I'll show some charts today.
Yeah,
people will be stunned how tight that relationship is.
Let me ask about the Canadian just a little bit more, and just before I know you've got to go because you're going to be, you got stuff to do here, and you're speaking this afternoon. I'm looking forward to hearing that, obviously, because I think this stuff is so pivotal. But just talk a little bit more about the Canadian dollar. What kind of things? And the thing is, you get to change your mind. You get to see what the market's doing. But today, as you look forward, what are you kind of looking at Canadian dollar-wise?
Near term, I think the Canadian dollar is going to weaken because I think the U.S. dollar, because a little bit of a flight to quality here, we saw that on Friday. The U.S. dollar was the beneficiary, not the yen or the euro. I think the PAC in general, the PAC of currencies, including Canada, is going to weaken over the next several months. But once this dollar, I think, makes another run, I think we are in a commodities upcycle also.
Yeah.
So I think commodities will turn with it, and I think that the Canadian dollar maybe comes down to 74, then I think takes off like a rocket ship.
Well, I look forward to your talk today, Jack. And again, I got to thank you for coming. Jack Crooks, Black Swan Capital, but find him at blackswantrading.com. And by the way, click on and get the free macro letter looking at the global kind of context. It's so important when you're sitting here. I know the news is local, but everything is influenced by macro global events. As we saw here in Vancouver, seen in Calgary, the oil price isn't set in Alberta. The real estate upper end of the market isn't set in Vancouver. It's capital flow coming in. Jack Crooks, my thanks for coming.
Thank you, Mike.